All right, good morning, everyone. Let's see if I get confirmation from my associate here that we are projecting, we are presenting. There we go. I see that. All right, guys, we're going to get started in about 2 more minutes. Welcome, everyone. This is Victor Chavez, the COO of RGC, and I'm excited to present to you a little bit of gold nuggets to get started with your commercial real estate and or lending career. Um, we all come across some unique transactions from time to time, and this is where we shine the most, RGC Capital. We're able to facilitate financing and assist realtors how to attract buyers, how to represent sellers on a commercial listing, and most importantly, how to define value on a commercial property. So we're going to go over that today and a little bit more. This is just an overview of our program. We host numerous types of trainings on the commercial lending platform and real estate as well. And I encourage you to join us on the next few slides that we're having. We'll make announcements, of course, but this is just going to be a brief overview of what we want to share with you on how to break into commercial, what's been successful for us. And here again to share a little bit of knowledge of my 30 years of experience with you. And hopefully I can grow your business because we rise by lifting up others. All right, we're going to get started a little bit. We'll just for the audience to join in. And I thank you once again for your time, and I hope to make it a productive day for you. All right, I see a little bit. All right, guys, we're going to get started. I promise to make your time worthy today. My name is Victor Chavez, once again with RGC Capital, and we're here to present to you the essentials of marketing tactics for commercial real estate. To ensure your success, we're going to share a little bit about who you are, what we do, and how you can benefit from aligning yourself with a proven lender in the commercial private space. All right, so one of the first things is, are you utilizing your DRE license to the fullest of its capacity? What I mean by that is a lot of realtors, they endeavor in their residential space, which is okay, which is great. And every now and then they may come across a commercial transaction. But here at RGC Capital, that's our specialty. We specialize in the commercial real estate arena. And I wish to show you how you can expand on your, with utilizing your DRE license by doing real estate investments, trusting investments, originating loans on the commercial side. We can pay you a fee for your services on any commercial loans that you present to us. But most importantly, how do you open up the door for representing entrepreneurs, representing investors, buyers, or getting that commercial listing? We're going to show you how in the next coming slides. So I encourage you to take some notes, first of all, and let us guide you through the process, because that's what we do best. We help others with their real estate career and ensuring them ways how they can generate ancillary income to the commercial real estate arena. Well, first of all, it's DSCR. You may have heard of that before, debt service coverage ratio, right? Well, that's synonymous when it comes to commercial real estate, because on residential transactions, you usually have to define what the buyer's purchasing power is, or we have to define what the borrower's ability to qualify for a loan is if they want to refinance. The same is true on a commercial property, because most commercial properties are income producing. Even if they're owner occupied, a retail building, an industrial park, or even a bar restaurant, we look at that if they were rented. What's the highest capacity to rent that property can generate based on its price per square foot and other amenities associated with it. But with the DSCR ratio, we look at the subject property, not so much the borrower is secondary, but we look at the subject property as a borrower, as a qualifying entity, and what income can that property generate, right? Based on its own merits, based on its condition, based on its square footage, based on its location, and a variety of other factors, its amenities, right? And that's when you come in. As a professional agent, you're going to be able to discern what the highest price of this property can be based on its income that it's producing. Even if it's vacant, we're going to look at it as if it were occupied, what the open market would support on way of rents, right? So that's the first and foremost. We look at the subject property, DSCR. A debt service coverage ratio is a relationship between a property's net annual income, the NOI. And these are terms that you need to know, net of our operating income. It's annual mortgage debt, which is the mortgage payment, which includes the principal and interest, but not the taxes and insurance. So when we calculate debt service coverage, we want to make sure that it's just a principal and interest payments included, not the taxes and insurance, because we're going to account for that later on. For example, break out your calculators, guys. I want to make sure that you run through the samples here, because in real life, when someone's asking you, will my property qualify? If I buy this $5 billion property and you're representing the buyer's going to want to know, is there enough cash flow for me to make my mortgage payment, or do I have to put money out of my pocket each and every month? We're going to go over that scenario right now as well. But we want to make sure that the subject property is sufficient income to cover the debt that it's qualifying for, right? If not, that means your buyer would have to come up with more money down, or the rents are too low, right? Or maybe there's something wrong with the property's condition that's bringing the rents down. So if a property is at 125 in net operating income, and the annual mortgage debt is $100,000, then that would mean the debt service coverage ratio is at 1.25. Much like residential lenders, they require the borrower to have a debt front-end ratio and a back-end ratio to qualify. Same is true with commercial, but we call it debt service coverage ratio, or DSCR, you'll see. And that's very simple. Once you define what the annual income expense analysis is of the property, divide that by the mortgage, you will come up with a 1.25. And that's the factor that most lenders like to see when it comes to commercial financing, whether it's retail or whether it's apartments or mixed use for that matter. We want to make sure that that property, based on its own income, is going to substantiate and support its debt. If not, that loan amount would have to be lower. In turn, the buyer may have to come up with more money down. So these are good numbers to have. It's a good formula to keep and to understand. Here again, this is just a brief introduction on the commercial lending arena. At the same time, this is how an appraiser will analyze a property as well. That's very key. So when realtors do a market analysis on a property, on a residential, you compare it with other properties. You compare it with like properties. If it's 3 bedrooms to 3 bedrooms, if it's 1,500 square feet, you can compare it to other properties similar in its condition, appeal, and design. Same is true with commercial, when we look at the property's income to determine what the value of that potential property may be. So it's very important that you as an agent know how to debt service a property, so you can figure out what the max loan amount would be, and from there, do a reverse calculation. We can figure out what the down payment requirements would be for a potential buyer. And or we can even go further and figure out sales price. So let's go on to the next step. That's just one way of figuring out value. The other way is the cap rate. We all heard of cap rates. Cap rates are synonymous with income producing property. You need to determine what a cap rate is, and we're going to show you that. And I'll provide you with some cheat sheets as well. These cheat sheets and analysis forms that we put together are for your benefit. It's plug and play. We're going to go open one right now, and I'll show you how you can, if you have the numbers of income producing property, you can plug those numbers in. You can figure out what the expenses are for management, expenses for utilities, expenses for taxes, expenses for mortgage payment, all that. Once you have those numbers, you plug them into our cheat sheet here, and you can define what the debt service coverage ratio would be. At the same time, for a cap rate analysis, you can define what the potential value of a property can be based on its net operating income. So a cap rate is a return of a reasonable investor would expect to receive as a result of their investment, right? So if we're buying a property, we want to make sure that the down payment and the money you're about to invest in this property, that the cash flow is sufficient enough for you to make profit each and every month. Why would a buyer purchase a property that's overpriced and the rents are not sufficient enough to cover the mortgage payment? Why would a buyer have to put money out of his pocket each and every month just to make the mortgage payment? Well, that's not a good investment. So the cap rate helps you define what a good investment is and what the cash flow of that investment would look like for your potential buyer. Imagine having these tools here and having the knowledge representing a buyer on a commercial property or an investor, and defining that you found a property that's undervalued based on its rent, right? You've done your homework, you've done the numbers, you ran the scenarios. I'm going to show you right now how you can do that. And this is free for you. After the meeting, you're able, I have your emails, we'll subscribe, we'll send you over this DSCR cheat sheet. Let's open it up. So it's a debt service coverage ratio. Here it allows you to put the customer's name, the address, but look at the annual debt service here, the gross income of the property. This is an apartment complex. This person was buying this building. We ran the numbers. This buyer asked me, Victor, if I put X amount of dollars into the property, $6 million, right, as a purchase price. But if we put down a down payment sufficient enough from a 1031 tax exchange, $2.5 million, is this property sufficient enough to cover my mortgage payment if I put 2.5 million from a 1031 tax exchange? Imagine having those buyers. It's great having a first-time home buyer buying a property for 600,000-700,000, but it's even better when you align yourself with the commercial investor. Because if you do the job right, if you hit the numbers on point and you represent their interests and you've shown your work, they're going to want to come back to you again. And that $6 million can easily turn to another $5-10 million transaction. Guys, I'm here to tell you that if you endeavor in the commercial arena, aside from what you're doing in the residential, now the potential of recognition, increase in commissions, and what you can do on your free time would greatly be expounded upon. You can do a lot more. So let's get back on the income. So it's up to you as an agent representing your buyer, your borrower, or even the seller for that matter, to define what the rents are on that property. Usually you would get that through the leases. You would ask the seller or the borrower to provide you with a copy of the rent roll, right? All that, put it together, and you define what your gross income is, right? And then most banks and appraisers will take a 5% vacancy factor off the top, right? Even though if it's 100% occupied, they're going to stress the property to show a vacancy factor and make sure that the property is still qualified, even if one or two tenants were to be vacated. And if the property is more than 5% vacant, then they're going to hit it with a 10 or 15% vacancy, depending on the occupancy level of the subject property, right? And then here again, if we have commercial leases, then it'll be 10%. If it's triple net, then it'll be less, because now on a triple net lease, that's another training class we get into, analyzing leases. But on a triple net lease, usually the tenant pays for the expenses associated with the property, their prorated share, such as a tenant may have to pay for their portion of taxes, their portion of insurance, their portion of the maintenance equal to the square footage they occupy. But in this case, we're just hitting it for 5%. So my adjusted gross income is now $730,000. The operating expense represents 30%, right? And the 30% is just a general number. But here again, underwriting your file, and what the appraiser would evaluate, he is going to use some these numbers very similarly. Now, if the property is in disarray, it requires a lot of repairs, or it needs a lot of maintenance on it, then your expenses here may go a little higher than 30%. 35, 40% is what I've seen. And the opposite is true. If you have a property that's in excellent condition, pristine, newly built, then this expense ratio will be a lot less. Now, the expense ratio includes your taxes, your insurance. It's going to include maintenance, management of the property, and other expenses associated with the subject property to maintain it. So that's where that 30% comes from. And we dive deeper into the expense analysis on our next training class. But then now we define what my net operating income, right? We took 5%, we took 30% for expenses. This is my NOI. And this is terminology you're going to have, and you're going to learn more as we go along for triple net leases, expense analysis, and NOI, net operating income, when you speak with an investor, because a lot of times these investors may know more than you. Maybe they know cap rate, gross rent multiplier, DSCR, all this terminology. So it's incumbent upon you to learn that if you want to play in the commercial lending arena, the commercial real estate. So the value is $6 million. My loan amount is going to be for 3.5. The buyers came in with from a 1031 tax exchange. They put $2.5 million down. I gave them an interest rate of 8.2. It was a stated income loan, so no income taxes were required, and really very little qualification. So this buyer was able to qualify for this loan just based on their 1031 tax exchange. So my monthly payment came at $26,000 a month at an 8.2 fixed for 30 years. Their net annual return on their investment was about $79,000. Now we know for a fact that the buyer is not going to operate the property at a 30% expense ratio, but the bank likes to see that. The buyer is probably going to operate at a 20% or 25% ratio. So they're going to increase their annual income on a monthly basis. This shows that we have a debt service ratio of 1.25. This property qualifies, right? In a few years, they're going to refinance and get a lower rate. And that's going to increase their net operating income. It's going to increase their net profit on a monthly basis. And it's going to be a win-win for that buyer. Now, if you were to show this and break it down to a potential buyer who's purchasing a $6 million property and show this and break it down and explain to them in detail, they're going to love you for it. You're going to do well. Let's get back to cheat sheet, cap rate cheat sheet. This is another tool that I like to use. It's helpful for you, right? It shows here, if you were to find what the gross monthly income of a particular property, you can figure out from there what the cap rate is. And if you figure out the cap rate, you can figure out the value. So this is a valuable tool to have in your commercial toolbox, I like to say, and it's helping you grow your business by assisting other potential buyers. Or if you're listing on the property, you want to make sure that that property value is within market trend, given the condition of the property. So here again, you would enter your gross rent income here of the property, right? It will annualize it. We take 5% for vacancy. Here I took 35% for operating expenses, but because this particular property required a little bit more maintenance, right? And now I have my net operating income. So what I did here is I simply got my net operating income, divided that into one of the cap rates here, and the cap rates are defined down here. Right? This is just generally speaking, each particular property type, each particular geographic area hosts its own unique cap rates. So it's up to us to do a little bit more research and you find that. And our agents have been trained and they're astute in this cap rate analysis. If you call in, we'll assist you, we'll walk you through the process, we'll help you define value and assist you based on the information you provide us on the income, the expense of the subject property. We can help you pinpoint the value. I've been a commercial appraiser for over 8 years, a while back, and I endeavored in the commercial residential arena. So I'm bringing that skill set, that talent to help you grow your business and to welcome you to the commercial real estate space. So here again, cap rate in LA County is defined by age, condition, mixed use of the property. Do we have more commercial? Do we have more residential components to it? External sites, external influences. All that plays a role on the subject property and what cap rate. Everybody wants to go with the pristine cap rate of 3 to 3.5, but it may be somewhere in the middle. But here again, if you plug and play, you put your numbers in here, you're going to have a variety of scenarios, a variety of price points to determine what is a good sales price for the subject property. And furthermore, based on the information that you input here, it's going to give you a price per square foot. And that's how we determine value as well. Another component is not just the cap rate, the debt servicing, but also the price per square foot. Much like a residential transaction, you want to compare apples to apples, 3 bedrooms to 3 bedrooms, or 2 bathrooms, 2 bathrooms, 2-car garages, etc. Same thing. We want to do a square foot analysis so we can figure that out. Having this content, this information, presenting it with the DSCR cheat sheet I shared with you, showing your potential investor or buyer this cap rate analysis, it's going to elevate your game. It's going to help you define value, and it's going to show that you know what you're talking about and representing your client's interest. And here again, you can use us as me and my team as associates or assistants to you in helping you grow a commercial business. Let's carry on. All right, how do you reach out to the right audience for marketing commercial clients, right? I started off like most of you in the residential arena. I did residential loans, I did residential real estate. I assisted buyers and sellers with their residential real estate needs. But gradually I started going into the commercial markets. And the reason why I did that, because Well, there's a lot of competition in that residential space. And I found out there was not a lot of competition in the commercial. So I learned a lot of things. I learned what not to do. I made a lot of mistakes and I lost a lot of money. In this business, if you make a mistake, you can lose your commission. We don't get paid on an hourly basis or a weekly paycheck. It's based on our skills, our talents, and our performance on how we work with our clients. So I'm here to show you and tell you that when you get these transactions and you're representing a big client, $6, $7, $8 million, you got to know your stuff. You got to know your terminology. You come back with, I don't know, or that's a good question. Let me get back with you. You can only do that so many times. We're here to be of service. We're here to be an assistant to you. We're here to guide you through the process and to show you how to market for these type of transactions, right? It's very simple. You probably know this already because you're doing it already with your residential side. But now I challenge you and I implore you to incorporate a little bit of commercial into your presentation, right? When you're speaking with people, when you're on social media, everyone's promoting residential loans, right? Everybody has a residential lender, but how many of you have commercial and private money lenders? There's very few of us available, but we mastered this, we're improving, we're getting better at the same time, and we want to share with you our ways on how you can attract business. At the same time, don't leave any money on the table. If you have a client that you're representing the commercial side on a real estate transaction, or even a buyer for that matter, and you're looking for a loan, there's opportunities for you to generate income as a licensed professional through our commercial and private money platform. So I'm going to share that with you right now. So social media, we're active on social media. If you're advertising your residential components, incorporate a little commercial. You will see that there's a difference. You'll see that you're attracting a different audience from doing so. Your past clients that you work with, let them know, hey, I've got a commercial channel, RGC Capital, we can help you grow your business. If you're looking to buy, you ever thought about selling? If you're self-employed, maybe you're a tenant, your client's a tenant, they're looking to buy now. For what they're paying in rent, they can probably pay on a mortgage and buy a property. And that's when you come in. Having that conversation creates an opportunity for them and for you. So it works. I call this sniper marketing because we specifically work directly with and attract entrepreneurs. We work with people who are self-employed. We work with people, mortgage real estate professionals, attorneys, doctors, even commercial real estate agents to let them know who we are, what we do. We have a whole list of lender tools for you, from scripts, from flyers, to all types of marketing pieces related to commercial at your disposal. We'd like to help you. Direct mailing. Our direct mailings is strictly for, I don't hit the residential farming, we hit the commercial market space. Now, your main thoroughfares, we pass out flyers, we let people who know we are, we send out postcards. And if you do that, if all commercial based, guess what? These owners, these self-employed people, these commercial owners, they own residential properties and they own other residential investment properties. So you start from the top and you can work your way down and help them with the residential needs as well. Guys, I'm telling you, the commissions here can be game changing and to help you and your family and spend more time with them. I had somebody the other day, I was at a presentation for C21 chain and they were acknowledging their top producer, the residential guy. He closed like 68 sides in 1 year. He had a whole team of people helping him because one person can't do that. But then they had another guy who closed only 13 transactions in that same year and far surpassed the residential guy who closed 68 transactions. Why? Because the one who did commercial closed 13 transactions. His income was greater than the guy who closed 68. But what I'm getting at is the guy who closed 13 transactions had more time with his family, more time to spend, and he grew his business, didn't have to work so hard. So I challenge you to get involved, right? How do we reach out to the clients? They're there. They're existing clients. Let your existing client database know that, hey, I'm endeavoring commercial, you're looking to buy, you're looking to rent, you're looking to expand, or maybe downsize your current building, right? And ask your clients, let them know. They probably know you by your residential services, but let them know now you can provide them with commercial services. And we're here to be a backstop. We're going to be a market arm. We can help you grow that specific type of business. Just reach out to us. I have a team of licensed professionals that can be of service to you. All right. So Our Pacific target marketing saves time and money. How do you figure out your target audience? Right? It's very simple. You already have those tools. Right? We reach out to appraisers, reach out to title companies. We also reach out to credit unions. We also reach out to local marketing associations, public accountants, financial advisors, all these and much more. Attorneys, I love attorneys, especially the divorce attorneys. In California, a 50% divorce ratio, or even more, I say, because the other 50% or 25% can't afford a divorce. But anyways, divorce attorneys are great for conducting business, not just family divorce, but business divorces as well. There are partnerships out there that are breaking away, and partnerships have to pay out another person. Usually they have to sell a commercial asset. Usually they have to refinance, right, on the commercial side. And that's who we work with. Those type of business attorneys that have a separation of assets. We represent their agents, their clients, and provide them with solutions. And if you tap into that business, it's a whole new arena for you. So I encourage you and I challenge you to reach out to these people, make it a point of your day to use the word commercial that you can assist others and watch the business come in. It works, guys. I get leads every day because of this, and I encourage you to do the same. Target marketing, marketing for clients, target marketing for different properties. A lot of people target market for residential, for closures. We target market specifically for apartments, automotive, mixed use, warehouses, self storages, all types of automobile places, and even warehouses, churches, bars, restaurants, you name it. We've done it all. Cannabis is hot right now too. So our conversion rates when it comes to working with apartments, commercial type properties, is higher than my residential because these people keep on coming back. These buyers, these sellers, these borrowers that come back to us a second time. And the reason is our lending platform is only for maybe from 1 to 5 years. We very rarely do a 30-year fixed rate term. So those type of clients are always in fluctuation. They're looking for a new loan every now and then, or maybe they're looking to expand, maybe looking to downsize, but they go to real estate professionals like yourself first. They don't always come to us. They go to realtors like you or other mortgage professionals seeking advice. Where can I find financing? Where can I find capital? Where can I grow my business? I'm looking for another opportunity to buy. But first and foremost, let's get your loan approved. This is what we do. So when you work with the commercial space, right, your lead generation is even higher because people know in that circle of business that they're going to refer you out to other people that are within that business. So if you specialize in commercial real estate, well, you're going to attract those type of clients. Establish clientele trust by demonstrating deep understanding of the markets and deliver unique solutions to their specific needs. That's what we do. That's what we all do. We provide solutions for clients who are looking for financing when it comes to commercial space. You may not fit an SBA or bank type loan. If your clients don't, we have a solution for them through your efforts. All right, funding referral program. How does this work? Very simple. Let's say you have a client. Maybe they're not looking to buy, maybe they're not looking to sell, but maybe they're looking for a loan. Maybe they want to expand, right? Maybe looking for capital. You as an agent, even though you're not NMLS licensed, but you're DRE sponsored, we can pay you referral fee. So at RGC, if we were to give one of our fellow real estate agents a listing, they would in turn probably give us 25% referral fee. We would do the same for you. So if one of the agents are looking for a client that needs financing for whatever reason, right? We would do all the heavy lifting. We will pay you a fee for your service. You do not require an NMLS license for this. So long as you're DRE and broker sponsored, we can pay you a fee for just introducing. Our agents are hands-on. They'll walk through the process. And most importantly, we make sure that you get paid at closing in writing. Now, here are a few ideas what other agents have done in the past, right? Aside from what they're doing on the residential, they've referred business to RGC Capital, and just recently we closed this one right here, the first one, Montebello. It was a building in Montebello. Doctor couldn't find financing. His taxes were in disarray, but we didn't use his property taxes to qualify. We used our unique underwriting sources. It was speed and ease. We closed in a few days. We provided with the first and the second trustee. That referring broker provided us this opportunity. Within a few days, earned nearly $30,000. Another one, 20 units in Gardena, $2.4 million, a referral. We were able to give them a damn good rate at that time. And that referring broker made 18,000. Guys, what I'm saying here, just a name, a phone number, refer to us. We can do the heavy lift, or you can help us and work with us together on the transaction and earn more. But the opportunities are great and they're never ending. These commercial markets are ever adapting. And if you're involved in that, you can make a quick dollar. This will close in 5 days. This will close in 10 days. Imagine making 10-day referral fee, 15,000 in 5 days, 26,000. That could be you. I want to share a little bit of something. I got this from a reputable commercial source. Industrial space comps. Sales in the last 12 months, median price, 3 million. Median price for residential in our surrounding areas about 650, right? But here, if you endeavor in this market, $3 million, your commission, 3%, that's $90,000. $90,000 in one transaction, right? And guess what? These transactions take just about as long as a residential. Residential, you can probably close 2 weeks, 30 days on a residential transaction at 600,000. You can figure out your commission there, but 18,000, right? At 3% if you're representing the buyer or seller. But on the commercial side, same heavy lifting, same unique sets of problems, but the greater reward and the greater recognition. And guess what? Once you do one of these transactions, and if you did it right, that buyer, that seller is going to use you again, and they're going to refer you to others as well, their circle of influence. That's what starts, guys. Other business owners talk to other business owners, and they refer you business all the time. It happens to us. It can happen to you. For multifamilies, 2.5 on the average, right? Prexy, that's what they say. You have a little breakdown here. Average days in the market, 109, 92. Our closing timelines, if we do a full doc transaction, 30, 45 days. If we're doing the stated, a lot less. Quicker turnaround, more profitability for you. So I challenge you and I encourage you to please incorporate commercial into your markets. This is what we do. If an agent actively pursues commercial lending or commercial real estate in their marketing at the average sales price of 3 million, imagine if you at 3%, 90,000, if you were to do just 10 deals a year, let's say half of that, $450,000, that would be a game-changing, life-changing commission structure for you and your family. And this is just aside from what you're doing. I'm not telling you to stop your residential, but incorporate commercial into your practice and see the results come in, guys. It's really amazing. Here's our broker contract, how we protect you, how we ensure your referral fee for service, and this is how you get paid through RGC Capital. Very simple. This training was free. If you scan the Google review, leave us a good Google review if you like the training. We're going to have more coming in. We can host training at your office. We can host more training online and give you a greater detailed breakdown of the analysis that we've given you, how to debt service, how to understand cap rate, how to go over scenarios. If you have any questions, you're welcome to call us directly, to email us with any of your loan scenarios. We're here to be of service. We're here to grow your business, and we're here to support you, because at RGC, we rise by lifting up others. This is the end of my training. I just want to be cognizant of your time. I didn't want to take more than 30 minutes. But this is who we are, and we're about growing your business. Before we receive, you must give, and that's what we're doing today. Our training was free. Our overview was free. Just give me a Google review if you liked it, and I appreciate it. Thank you for your time today. Let's make it a productive day, and I'm here to receive your phone calls. My number's on the screen right there. My name is Victor Chavez, and I'm here to be of service to you and help you grow your business. I thank you once again for your time. Let's make it a productive day. Thank you all. Thank you for attending.